Okay, student, this is the continuation of video number 2 where we were discussing about the schedule of non-current asset. This is third video, right? We were talking about the depreciation. Basically, that schedule of non-current asset is not the different thing. We already, if you know the T account, then this T account you can draw it in the vertical format. Is known as schedule of non-current asset. Okay, it's not difficult. If you know T account very well, then easily prepare a schedule of non-current asset. So over here, opening balance of non-current asset. This is opening balance in T account we record here. This is opening balance. Okay, bought. This will increase the non-current asset, and bought we will add this. When we dispose non-current asset, we record cost here. The disposal will minus. We minus that, and this is the closing balance, and this is the closing balance. Okay. So it is not the different thing, but why we prepare this schedule of non-current asset? This schedule of non-current asset is a requirement of intellectual accounting standard, depreciation. Okay, this standard, detailed explanation of this standard you will study in A2, right? So if you know T account, let's draw T account vertically. It is known as schedule. Okay, office machine. Similarly, depreciation, the opening balance of depreciation. Opening balance, we call it brought down, and depreciation charge for the year, depreciation for the year, which will be transferred to the income statement, and here you can do total. And if we have sold any non-current asset, the total accumulated depreciation of that non-current asset will be transferred to disposal account, and we will manage that like this. Opening balance of non-current asset, opening balance along with depreciation, opening balance will be recorded here, and depreciation charge for the year, we will record depreciation charge for the year. Any asset which was sold for the year, and we record the total accumulated depreciation. We will debit along with depreciation, and have to minus it. Debit means minus. Here you minusing it. Debit means minus. Here in vertical format you have to minus that, and the remaining will be your balance closing. And remaining will be your balance closing. Balance closing. This is balance closing. Okay. The cost of non-current asset closing balance minus accumulated depreciation is equals to net book value. Net book value. Okay. Then you have to draw a double line and close it. Net book value. This net book value will be transferred to the balance sheet as a non-current asset. Okay. This is the format. After the format, I am going to solve one question here. This question I will upload in LMS group, in my Google Classroom group. You have to see that question first and to try to understand how I am solving it. Right? Try to understand. Then you can understand it well. And any problem, you're most welcome to ask me in the WhatsApp group. Okay? That will be easier for you to understand. Okay? We have 2 days to finish the chapter. We don't have a longer time to complete the syllabus. We have further more syllabus to cover it. This is one question I have made. I will send you this in the group. Okay. I think you cannot see it clearly, but I will send you. If you see it clearly, it's fine. I'm just going to read that question. In this question, which I have given to you, there is opening balance of non-current asset. There are two non-current assets: motor vehicle and office machine. And the opening balance given here, which is 2006, as well as there is a allowance for depreciation of the respective non-current asset is also given for 2006. For 2007, the lot of information is given here. Okay, some asset, one asset is bought, one asset is sold, and the depreciation policy also. Depreciation policy of motor vehicle is 10% on cost, and depreciation policy of office machine 20% reducing the limit. I'm just quickly reading that. You can download it from the LMS, then you can easily have it hard copy with you, you can easily understand. If you see the requirement here, number 1 requirement, motor vehicle account at cost. Number 2 requirement, office machine account at cost. allowance for depreciation of both non-current asset, office machine and motor vehicle disposal account, and the schedule of non-current asset. Okay, this question I'm going to solve it. Okay, the first balance opening given, the first requirement given here, requirement number A. This is question number 1 or worksheet 1. Okay, the first part A requirement of motor vehicle account, motor vehicle account, right? In 2006 we record the opening balance of motor vehicle here, right? In 2006 the opening balance of motor vehicle, 2006 December 31st. Balance BD is given here. So balance BD is given in the question paper. That is 400,000. 400,000 balance BD. And the motor vehicle bought. And I'll give you the solution in my group also. It's just explanation, and the hard copy of the solution I'll send you. Okay. The motor vehicle bought by check by $100,000. Okay. The total balance of motor vehicle at the end of the year is $500,000. Okay. There is a point says motor vehicle of sold one motor vehicle by check $110,000. This vehicle was bought at 31st March December 2005 for 180,000. Okay, we cannot record the selling price because the account we preparing at cost. We cannot record the selling price of any non-current asset in the asset account. So in 2007 December 31st, one motor vehicle was sold. The cost of this asset was sold. What was the actual cost of the asset bought earlier? 180,000. Okay. However, it was sold by $110,000. Okay. But we cannot record $110,000 here. This will be recorded in the disposal account, right? Then after this, we have to record balance CD. December 31st, balance carried down. And you know it well how we will get the balance carried down. 500,000 minus 180,000, it becomes 320,000. This balance CD and the 500,000, and this is going to balance BD 320,000. Right. Now, if you see the second requirement, number B, which is office machine account at cost. Office machine account at cost. Why I'm writing at cost? Which means office machine asset account can be prepared at cost or at net book value also. Same you can apply the formula here. Opening balance in 2006 December 31st, the balance BD. Okay, the balance BD is given here on 31st December 2006, right? Along with depreciation, office machine opening balance is office machine cost. Office machine cost account opening balance is 500,000. Okay, opening balance is 500,000 is given here, and 2007 December 31st, then office machine bought by check. Office machine bought by check. The value of the new office machine bought by check was 200,000. Okay, total balance was 700,000. But no office machine was sold at the end of the year. In 2007 December 31st, no disposal. The same will be recorded as a balance carried down. Same will be recorded as a balance carried down, 700,000. And balance brought down. These are two requirements here. Okay. The third requirement number C, the respective allowance for depreciation account. The respective allowance for depreciation account. When you draw the allowance for depreciation, motor vehicle MV motor vehicle, and okay, as I told you earlier, the asset account balance BD always come on the debit side, but the allowance for depreciation balance BD always come on the credit side, right? So the opening balance of allowance for depreciation of motor vehicle is given here in 2006. It is given in 2006. First 31st December. I will continue this account in my next video, video number 4. Okay.